The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician on this 20th day of April. My pleasure to be here Monday through Friday. And of course, today is the day, well, the evening actually, that I do my webinar. This is going to be a really fascinating webinar. Timing is just perfect for it. I couldn't complain. Just ideal conditions, like the weather, I guess. Looking at the 2-minute E-mini, you've got this rally that's really straight. It's a nice rally. It's up 8.50. What I'm really looking at, if there's a break above 344.50, you can start a C and a D to the upside. But I think that we're kind of trapped for a little while with a bounce, and it's gonna be a bounce. The afternoon session is going to be very important. Let me explain why. Let me get out of that and let me just go through the numbers. And as I go through the numbers, I'll do a kind of a preamble, kind of what I'm going to be doing tonight, but I'll do it in a much shorter time frame. We're looking at the Dow. The Dow is now closed above the 9-period exponential moving average for, I think it's 19 sessions, something like that. It's at 20,487. It's up 83. 20,544 is the 9-period exponential moving average. The MACD is attempting to flatten out a little bit here. The histogram's improved quite a bit, and the stochastic has pulled back, but it is, although the price was below the left side low bar, the clue that there could be a bit of a bounce is that the on-balance volume is trying to make a little V-shaped bottom. Stochastic's at 18%. What I'm really looking at is that the weekly chart has started its leg B to the downside. That to me was very important. It confirmed for me that we're in a sell mode in the weekly chart. And let me just quickly do this because I had some questions about it. I know that it's one of those Friday technical details. But this is the Chapman wave. This is the inverse Chapman wave overlapping wave. What happens, you go on the way up, if you go to a peak C and then you pull back fairly sharply, and within that you start to make a little peak A, I call it a gray A, and then a little bit of a B, and then you make it a little bit of a C. If the price continues higher into leg D in this inside buy mode, it picks up the left side one that looked like it was failing, and together they create, it's like coming onto the highway when you come from the extension road, the on-ramp. You have to accelerate because you want to be ahead of the traffic. You don't want to be holding everybody back. And as everybody comes together, you get this whoosh to the upside, and that gives you leg D. Well, the inversion is what I said to subscribers we're looking at. And if there was a breakdown below 20,450, I think it was, there could be an acceleration to the downside, and then watch out for leg D to the downside under 20,412. That was my target for quite a while, and we hit that yesterday. There was also a Chapman wave 5 in the daily chart, but the MACD and stochastic really are not looking all that great. So you can get your bounces, but I still think that we are headed for lower lows and lower highs. Meantime, so that's the Dow. So what are we looking at? The whole 20,370s to 50s should be a containment area for the Dow. It should be. If it isn't, you're going to go quite a lot deeper now to the 20,200s. I don't think that's in the cards just yet. Why? Because if you look at the S&P, here we go. If you look at the S&P 500, the SPX, this is the first time we're touching that 9-period moving average with a chance of closing above it, first time in about 19 bars. And we do remain short, but what's most important about this, just like the Dow, we want to remain in those positions for a little while longer. This $8 rally at 23.46 says that there's a chance, maybe, you could test yesterday's high bar if the selling doesn't come in this afternoon. And that would be 23.52.61, another 6 points higher. But my contention right now is that the MACD is trying to flatten out. It still isn't showing signs of strength. And the stochastic at 27%. My thinking is that the stochastic for the Dow and the S&P will eventually go to the single digits, and that we've already gone to the 15% area for the Dow. The S&P is right here at 27%. It still has further to go. So sell mode's in the daily and sell mode in the weekly. It'll have to take a move in the S&P above 2385 for me to really change my mind about this consolidation unfolding. Let's go to the QQQ series. Here we go. QQQ bouncing a little bit today, up 62 cents. I think there was a peak a peak F top in the 133.48 high on the 5th of April. I think we're in a consolidation phase. It won't become more than a consolidation phase unless there is a close below the low that was made on the 13th of April of 130.38. In fact, I would have to say until the Qs go into the 129s, this is just a sideways consolidation. I had a question about, am I bullish the Qs? Not yet. I think that all these stocks that we were looking at, Amazon, it's made a peak D high on the 5th of April at 923.72. It's really holding tightly here within a trading band, but I think it's going to go down further. Let me just go on with these others. I want to look at gold. Gold has had a nice little bounce here. It's up $1 at 12.84. This is very interesting. I think gold is the fear factor, and I think on the next pullback, we want to be starting to add to, we've already had and we've been taken out of a gold position, so we have nothing right now. But for my subscribers to my opening call, I think gold has to be in play as a fear factor because countries, individuals, countries, fund managers, no one's quite sure of what's going to happen politically or geographically. So I think that that's the factor that we want to keep in mind. So if you look at the GDX, it fulfills so much in my Chapman Wave Stork Lake formation. Tonight in my webinar, I'm going to be talking about these patterns. I'm going to be talking about what I think makes up the core of a portfolio for the next big move to the upside. I'm going to be talking about the XLF, the financial, the bank stocks, etc. Meantime, the GDX, which is the gold miners, look, you had your strong leg up, you had your body, you had your neck, you had the head at peak E, you pull back. What's the rule of the Chapman Wave methodology for the Stork Lake formation? The pullback, the beak, invariably tests the top of the body, which is at 2356 on the 22nd of March. And it took it out a little bit yesterday. Now we're having a little bit of a bounce. I don't think the consolidation is quite done yet in the GDX. And the weekly says, you know what, it's improving, but it's not a great chart pattern yet. It would have been last week. This candle this week so far is saying, hey, sideways-ish trading band, just for the shorter term, slightly lower highs, slightly lower lows. And then I think it sets up again when we get the fear factor kicking in. Now, the next thing I want you to do is, so crude oil, let's look at crude. Crude oil had that peak D as well. What am I talking about when I talk about peak D? Don't have time to do it. When I get back, I'll do that for you because the fourth highest peak in the Chapman Wave is where other things can happen, which means that the Dow could possibly be making a peak D monthly, but because the S&P, the NYA, the New York Stock Exchange, the IWM, and the Qs are all only in leg C, it says that 2017 should still see higher prices to come. So that's it. And we were going to go to the high-grade copper. And as we do that, look at that, very weak on the 20-period moving average. And there's the E-mini 10-minute just sideways trading band stuck between the ranges. I'll be right back. Basil Chapman, Tiger Technician Tower, Dow's up 89, S&P's up 8.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Wow, that was nice. I just got an email from Fred. He used to be in the den a long time ago. He's still very busy at his job. And I haven't been trading actively for some time, just haven't had time. And he caught my show the other day. Nice. Hey, Fred. Nice to hear from you. I was just thinking of you the other day, and I hope you're well. And yes, good to hear from you. So, and then a couple of questions. So let me show you this. You see, this is and I'll be talking about this tonight. This is the 30-year T-bond yield in white, the TYX. The TNX, the 10-year in brownie color, and the cyan color is the 5-year T-note yield. These are all the yields. And you can see that there was a cup formation, Chapman Wave double top. We call it the drop bucket formation. There's a technique that goes with this. And once I defined, and I said, you know what? I don't think we're going to break out. I think this is going to be a peak F in the weekly chart of the yields. I think it's going to be a D and a D in the 5-year and the 10-year. And if it pulls back more than 30 to 50% from the lip high on the left side at 31.97 to the trough, and it starts to pull back, be careful, because it could certainly go right down to the bottom. And if it takes out the bottom, it starts to close 1 or 2 weeks below that bottom, you could even have a 1-to-1 to the downside. Well, now the yield on the 30-year is 2.89, on the 10-year T-note is 2.23, and on the 5-year is 1.79. Nothing like it was down at the bottom at 9.11. That's amazing, huh? In the 5-year. So, but it's still way low, even though it's higher than it was. So what I'm really looking at here is that at this particular point, I think there's enough economic uncertainty just at this particular moment to say that my Japanization of bond yields thesis is still intact. I don't know how it can be after 31 years of a bull market in bonds, but that's what it looks like right now. And so that's what I want to say, and I'll talk a little bit more about it tonight. I wanted to show wood, which is the iShares of the Global Timber and Forestry ETF, seems to be holding quite nicely up here in leg E in the weekly chart. But what happened was that the Philadelphia index, which looked like it had an alternate count F/C a few weeks ago, spiked this week to a higher high, and now at 277.71, which was the high this week, I think that this is now leg D. So what we've seen is that And that's what I'll be talking about tonight in my webinar. This is a very unusual period because we've had 6-7 weeks. Actually, this could be the 8th week of the from the March the 1st, the 6th week. This is the March 1st high that was made in the Dow and the S&P and many stocks. And yet, within this context, what we've got is that you've used time and not so much price. If you look at high-grade copper, it's gone from the peak F top that was made in the weekly back in, I should have typed that in, right? Back the week of the 17th of February at 2.83, trading now at 2.53. So it's down quite sharply, but it's within the containment area of the rectangle that I've been notating, and it's on the 200-period exponential moving average. So this says that the high-grade copper is not doing well, but it's not breaking down, and that's something to watch. It's not great, but it's a hint and a heads up to say keep watching it. We're looking at a General Electric, which comes out with earnings tomorrow. Now, my contention is that the move that they made to Boston from Connecticut has cost them an absolute bundle. But it's not just that, it's the disruption that really takes its toll on moving. For anybody who's moved, you know it's disruption that's the issue. And I think that that's really what I'm looking at. So how GE handles its earnings report tomorrow, if the earnings report actually turns out to be good, I have to say bravo. I don't know how you did it because there's a lot going on. There's a lot going on in your entire industry. But bravo to you if GE tomorrow is trading above 30.42. Why do I even mention General Electric here? Why? Because General Electric, I think, has continually been a fantastic bellwether for us, for my Dow Quartet Index, GE, IBM, MMM, and UTX. And yet it has not been pulling back like the general market. Yes, it did make a high, but overall, that high on the in December 32.38 has just been a general downtrend, and now we've been a sideways move. And that just says to me real clearly that if tomorrow there's a 1 point pop to the upside that holds, I have to consider that this market is going to continue to be rotational in its correction, and that's the reason why a GE is looking good, an IBM is looking just horrible, down again today. And yet they're both in the Dow. Yep, they're both in the Dow. And when you get to MMM, look at this, a nice little candle, but it's kind of stuck in this kind of slightly lower highs and lower lows. And yet UTX, which was much weaker than MMM, 3M company, both multinationals, is holding very well at the upper end of its range, and yet is still way below the 124 high that was made back in February of 2015. So that tells me, and put it together with the QQQ series, look, the QQ series is at 132.12, the trusts up 63 cents, but it's struggling to try to get to the high that was made at 133.48 from the other day, the 5th of April. I've got that as a peak F, and I've got this as a single leg A to the upside. But I've got no signals whatsoever in the weekly chart. Still very strong. Haven't even got a sell signal. I do in the daily. The daily has gone from a sell signal to a sell mode unless it takes out 133.48. And if you look at the semiconductor index, trading now at 78.22, up 41 cents. Yep, it made a slightly higher high, same kind of pattern, but a much deeper correction. It's already gone from 80.05 down to 76.25. 4 points, almost 5% correction in just no time. That's a deeper correction than the general market. So my contention is that the semis are kind of under pressure, and they continue under pressure. The weekly chart hasn't broken its up channel support, the Chapman Wave inside track. So we'll be looking at that. And what's one of the connotations there? One of the connotations about the XLU, which is the utility index, breaking down. It was almost going to, what was it, 51. At 51.11, it was almost going to break to a new recovery high, and now it's pulling back. So let's look at the TLT. The TLT is holding. Now, the difference between the GDX and the TLT is that the technicals of the GDX suggested that it was a Chapman Wave methodology stalk leg formation. The TLT has got something slightly different. It's like a one-to-one, and I'm not yet sure whether it's completed its move to the upside. If it does, the worst-case basis, it tests that leg, that peak D of 122.25 is at 123.47. But my contention is that these are the things that are going on. Gold is a fear factor. Bonds are the safety of bonds as the market unsettles many people, so they're going back into bonds. And that tells me that we're looking at the fundamentals and the technicals. When they line up, it gives you a commensurate movement to the upside, a combination. And when they don't move up, you see this chop, chop, chop to the downside. So my thinking here is that bonds in the longer term, we might have made that top way back in, what was it? It was December or January of 2016, 15, right there. Yep, 2006, July of 2016, that peak that was made, that was a peak E. And we won't know until bonds, which are at 123 right now, take out, at least for 2 months, they got to break and close under 113. So we're looking at something very interesting. We've got a mixed market. We've got some sectors that have really taken time, and some have taken price, and others haven't even started their correction. That's what we'll be talking about tonight in the webinar. I'll be right back. Dow's up.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
TNT at 3824. This is Fortinet. I can't remember what they do. I remember seeing the name many times, and now I just don't remember. Let's see. Let's go from the low that was made right here in the monthly chart. I'll just very quickly show you the chart wave ABCDs. A to peak B. Again, A to a peak B, slightly under. Is that right? 2856, 2882. So that becomes a C right there. and then it pulls back sharply. This is the monthly chart, starting off back in 2009. Then it starts all over again and goes A, B, B, C, D, and an E. All right, makes a final top at peak E back in 2015, just about 50, and then it pulls back sharply, and it comes back. I haven't quite been able to put in an up arrow, but I can put the plus sign to say it's a start, and I'm going to call this A. And now, was that the one that had just that modest high? Yep, that's 37.31, 37.48. Yep. So this is in leg C. I like it. So the question is, I think have a position would like to add to it. I'm just going to say have a little patience. I think you're going to have a chance to add to it, unless it makes a leg D in the weekly chart much quicker than I think, and that would be above 39.03, the high of the week of the 1st of April. So what I'm thinking here is this. In fact, if you didn't have it, I would say to you, you could start a position right here at 38.25, a small position, realizing that you're going to give it about a point and a half of leeway. But yeah, I like it. I like it very much. It's making higher highs, higher lows. Weekly chart is improving a lot. I like it. And all I can say is that what you really want to see is to see it trading within a week and a half, trading in the 40s. Maybe 2 weeks by May. It should be trading in the 40s and holding in the 40s with 39 as support. And I do not want to see it break under 37, call it 36.80. If it breaks under 36.80, then I have to say, sideways until it's ready to move up higher. I do like it, though. Okay. Now, that was the one question. Another question was, let me just run these quickly. XRT, which is the retail, but it's a very specialized minute ago. Retail. So this is the Spider S&P retail. It has Groupon, GPS, there's Gap, it has outerwear, I think it's called, Francesco, Sears Holdings, etc. Burlington. So it's got a very nice rally at this particular point. Oops, there goes the doorbell. What a pity. It has very nice. I'm going to put an up arrow, and I'm going to say it's acting very well in the shorter term. But most importantly, 43.40s is the level of resistance. So I'm just going to say that. What was the question? XRT, ANF, etc. Chapman wave. Yeah, this is leg C in the. Here we go. Leg C in the XRT. Trading at 43.11, up 68 cents. It's leg B, it's leg A in the weekly. This is a good basing phase, but I'd be real careful if it gives back at 43.12 within a week. If it's trading under $42, that's not going to be good at all. You want to see this between above 43.70. So those are my parameters. Would I buy it right now? I'd say, you know what, I'm just going to have to hold off. I wouldn't be buying it. I'd be watching it. Next question is, GPL. Do you have enough GPL? GPL trading at $1.34. What was the question? Rafina wants to know, Basil, can you analyze for the entry point in GPL? Do I have to wait when it goes down to $1.30 or $1.20? Thank you so much. You know, this is a tough one. I don't follow it very often, but whenever I do, I'm always kind of surprised at the move on the upside, and I'm really surprised at the move on the downside. This is like a mini advanced micro devices. When it gets moving, it really moves. It was at $2.30. Now it's down at $1.34. I'm just going to say, for my purposes, I would not use this as a speculative stock unless you just want to buy a little bit and put it aside and just not even look at it for 3 months or 4 months. There's just too much going on here. GPL, this is great. Panther Silver, it can be fantastic. It did make a peak D in the monthly chart. I'm just going to say to you that it's just way too speculative. If you've followed it before and you've owned it before, then I would say have a little patience. I'd try to buy it at 128, 122, and then I would just, I'm not sure you can even put a stop in it. My intention right now is to say to you, I'd step aside. It's just not for the price. $1.34, you could lose $1.34. I don't know what's going on. It doesn't seem to be participating at all. So I hope that helps you with GPL. I just can't do anything with it right now. Bank of America is a question. So these are the stocks that I'm looking at. So we have some long positions in my opening call. pure stock positions, which are holding quite nicely. They're doing well. One's doing quite well, in fact, considering we've only had it for a few days and the market's been down, it's been up. So I don't want to shy away, but I'm looking at the bank stocks and I'm just saying to you, hold off on the bank stocks. I might be totally wrong, but I think that the bank stocks need a little bit more time to consolidate. And look at this. We've got the Dow up 100. The S&P is up 10, and yet the XLF is up a miserable 0.22. Yep, it's up 0.96, which is a bigger percentage, but it's coming from way down. I'd probably want to see the 22s tested, and that's where I'd be looking. So you say, hey, what's the big deal? $1.50. What? Because if it breaks down from 22, that's a problem. And I do think that the financials will be involved in the next big move up. But I think that you need a little patience now to see when and where and how. So that's what I'm looking at there. And another question was CSX. CSX is, of course, in the rails. Whoa, big spike today, up $3 at $49.95. So this is peak A. B, what am I doing? I'm just merely counting each successively higher peak. And a big spike, a peak E, and a leg F in the weekly chart. CSX is held beautifully up near the highs. It's still a leg C in the monthly. This is one that is participating beautifully on every move that it can to spike to the upside. It's at a high-level consolidation. It's telling me that something's going on in the rails that is a positive. So this is a very mixed market. You've got some of the truckers that were doing well, they did terribly. And now you've got the rails, CSX being one of them, holding very well. Mixed market, identify your area of expertise or your area of strength or weakness, and that's where you want to be trading. So CSX at 49.97, must be news, must be earnings or something like that. We'll see. And together with General Electric tomorrow, I think by the weekend, we're going to have a much clearer idea of what's going on. So I had another question. The question, where did it go? Yeah, Mr. Bull wanted to know about CSX, and I got an email at the same time about CSX. What is the other one? The transportation. So the IYT, which is something that I'm going to be talking about tonight in relation to the market, the IYT has had a nice bounce, but it's all within the context of trying to form a base. And that base at 163.91, where it is right now, up 241, well, probably because of CSX, says that area between 160 and 157 is going to be absolutely critical for the next 2 weeks. Why do I say 2 weeks? One of the reasons being we want to see what happens at the end of April with all the candles, because the candles are suggesting that we're going to have a peak C in the S&P, the IWM, and the other indices, but only a peak D in the Dow if there's no new high in April in these particular indices. I'll be right back. I'll show you the 120-minute chart as we know, the 10-minute chart, new leg B. Hey, very strong. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Everyone, we're back. So we're looking at the IYT. Dow's up 111, and I'm not sure about this. It's kind of like an alternate count. I'm going to call this F. This is G/B right now. Is hitting resistance, but you've got to understand that the selling pressure has been intense, but it's kind of been news-related, as well as individual stocks like IBM impacted the Dow yesterday sharply to the downside. For me, we've completed my first target, which was a price movement below the left side low of 20,412. Sorry, I had a lot of running around here in the break. I thought I was fit, but I guess not. Okay, so there was this overlapping wave. So we've completed that. Now there could be a rally back into the inside of this, and I suggest subscribers, we might even see a test of the 9-period moving average at 20,551, and then the red line, which is a 20-period moving average at 20,611. It's possible, making another arch formation before coming back to retest. The fact that the S&P is a little weaker than the Dow tells me that if I look at the same story in the S&P, SPX, the next, right here, click, then you can see the same sort of thing happening. And this is one of those H patterns that goes to an M pattern. It doesn't have to go all that high. I'm just putting it in as a pattern. And then a pullback. So when we're looking at all these different aspects, the most important thing is that the stochastic and the MACD are suggesting a little bit of a bounce, but they're not really showing strength just yet. And if you look at the MACD, let me expand this much more. You see that decline in the MACD, the moving average convergence divergence. You see the stochastic down to 66. That is not showing strength. In fact, it's not even recognizing the rally that is underway here. It's not even moved up. On balance, volume has moved up a little bit. And that's just telling me that there's a lot of noise. And what's really important is that you've got to be looking at individual stocks, and you've got to get a sense of the overall picture of the market to decide whether or not you want to be fully invested or you want to step back a little bit, have cash, and then start being fully invested at a certain time over the summer, spring to summer. So those are the decisions that I think one needs to be thinking about. Now, most importantly, if you look at, say, Facebook, it just bounced, made a V-shaped formation. We spoke about this yesterday as a possibility that it could go to leg E because fund managers in this particular environment are going to be forced to keep buying what works. That's really what they do. And they've done it very successfully in certain areas. And they do it until it stops working. What stops working? their IBB. I mean, they were just not wrong all the way to the high that was made back in July of 2015 at 400.79. And then it just didn't work at all, or it worked just for a month or two, and then bam, lower lows. You see, that's the whole thing that's going on here. And that's kind of my contention now, that there's a chance that the QQQ series is undergoing that kind of pressure, that fund managers keep going back in because it's worked for so long. But in fact, you might see that there's a certain volatility that creeps into the QQQ series in maybe by next week, because all of a sudden you're looking at, probably it's up sharply today, Google. Now it's only up a little, up $4 at 842, but it hasn't gone to the new high. This is a leg D within the other D. So in the Chapman wave methodology, you've made a peak D in Google in the daily back in March, and now you've had peak A, peak B, peak C, peak a leg D in the daily. If this stalls here, that's not usually a good sign, because what it's saying is you've got a buy mode within the buy mode, and it never took out the left side high. So I'm going to be watching Google very closely. No positions yet, but I'm just saying that this is something worth watching. We did make a peak E in the weekly, and the technicals did start to falter. The monthly technicals are still pretty good. So we're just looking at these individually and saying, got to be a little bit careful. The XLE is a question I got. Judy wanted to know about the XLE. Yeah, is the XLE a buy? Probably there's a question. Well, the way I'm looking at it, the MACD turned down sharply. The stochastic turned down sharply. Very ugly candle yesterday. I wouldn't be surprised if the XLE, the S&P Select Energy Spider Fund, needs a little more time. What do I mean by a little more time? That within the context of the left side low of 67.86, we went under it, and my rule of thumb in the arch formation is that the very next bar, within 2 bars, it needs to close above. If it does that, it could bounce to the next level of resistance. That's 69.20, the 9-period moving average. But you've got to be careful, because sometimes if the technicals remain weak, there could be a test of the low, and if it takes out that low, it starts another move to the downside. So I'm watching the XLE. I personally, at this point, I don't think I'd be touching it on the long side. Just for the moment, I need to have patience to see what happens. Next question I got was, I saw it a moment here. Oh, yes, the webinar. The webinar is going to be archived. Tonight's webinar, you'll be able to re-listen to it as many times as you want for the next 30 days. It'll be on your page. You get my newsletter, which is, of course, very comprehensive. Look at this, the work that I did just to explain one little thing, which was the Chapman wave, overlapping wave. I showed it on the, where is it? Where did I put it? I showed it on the upside. Look, this is upside down. There's your overlapping wave. There's your peak C. And now a little bit of a B, a gray C. And as C is taken out, it reignites the left side C. And together you go to D. And that D is usually a sharp move to the upside. And then it breaks to the downside. Well, let's see what happened. Here it is. Where's the Dow today? This is the pattern. And there's your move to the upside. Okay, so those are the techniques I like to teach, so that you can actually understand it while I'm doing it. I give the overall picture of my 5 quadrants. This is the Dow 120-minute chart. This is the VIX index. I said should pull back here. And here's the short-term trading index, no signals at all. And here's your leg D to the downside. It's now trough D in the daily. And you've got the S&P daily chart having successfully tested the left side without breaking down. So I wouldn't be surprised if there's going to be some kind of a short squeeze here. We keep seeing that over and over again. But what I'm talking about tonight is what happens at peak D and why. I'm talking about sectors that have been working, sectors that are not working. I'm also talking about overbought sectors that I think could have some kind of a sideways to down consolidation. Those are the things. And what is working, what is actually looking quite good. So it's going to be very comprehensive. And of course, I will be talking about patterns that I spoke about, like the TLT, like the GDX. Now the GDX is still not, it's up 20 cents, but I think it needs a little more work to the downside. But slowly but surely, it's trying to build the monthly chart to be a better formation. And when gold acts better than some of the gold stocks, that's different to when the gold stocks act better than gold. So let me just show you this chart and see where we are. This is still, This is the S&P cash in leg. Yeah, the cash is in leg C. I like that. And it's testing the left side high that was made at peak A, B, C, D, E. Leg peak E made 10 o'clock yesterday at 10, this time yesterday. All right, we'll be back. Basil Chapman, Tiger Technicians Hour.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, everyone. Basil Chapman. We're back. And there are a couple of things. So I had a question. Paul wanted to know, we're in the webinar tonight. Basil, tonight I hope you talk about margin debt and have a chart comparing margin debt to the Dow and the Qs. I've kind of thought about that, but I have so much to do. I'd like to answer questions as well. I'll have something prepared. I'll try to do it, but that might have to come a little later because there is a lot that I need to be discussing. So let me just do this one more time. The IWM, which is the Russell 2000, very nice move. Now, sometimes the Russell 2000 is a leader and sometimes it's not. Over the last year, we've seen sometimes it's really dragging. But what's most important is that we've got the French elections coming up. We've got a lot of potential uncertainty. We'll see how that plays out. But more importantly, I have no qualms if I see something if I'm prepared, if I look at the markets and I'm prepared to jump in now rather than wait, that is on the long side, I'm quite prepared to do it. You just have to put a stop in. I mean, that's what stops are for, or a buy stop, whatever it is. So remember, I don't want my bias of the technicals to influence me when I see so many conflicting things, like a General Electric moving up 1.07%. So let me just sum up what I'm doing right now. Within the webinar, let me just go to my webinar. I'm going to be discussing, you see, this is the Dow, this is the S&P, this is the NDX 100, and this is the transportation index sitting right on important support. If the transportation index starts to break down, there's a really good chance that you get some more weakness in the major indices. If it starts to hold very well, and all of a sudden, instead of being at, well, I've got this at 8933, which was a day ago. Let me just check and see what it is right now. If I go right here, I believe I can see it, yes. So if I go to this chart right here, the transportation is at 9120, up 143. That's really good action. So I'm prepared to say there are things that are going on here within the mixed market that says we've had a consolidation. It isn't the consolidation because we've not had it in the index. Look how well the index is held. Even the S&P is held a little bit better than the Dow. But this is still 6 weeks of a correction. Actually, it's going on to the 7th week. And I think that that's something that's serious. And now look at the pattern that we're looking at. See this big green bar? And then all of a sudden followed by 2 red bars. Is this a change because we've had the arch formation with a break and a close below the previous low? Oops, am I correct? The close yesterday was, yep, 20,404. And that this is a rally that could stop at the 9-period moving average or the very next left side high, which is 20,644. I got to contend that, with what we've got, and I'm watching the histogram of the MACD start to improve. So I'm not going to be fluffy here. I'm quite prepared to take off the shorts, go to the long side. I'm quite prepared to add to the shorts. I want to see how this plays out over the next few days. All I can say is that the patterns that I'm looking at, based on the weekly formations of the key indices, if I look at the NYA, this is the New York Stock Exchange, that is not a strong chart at all. The MACD and stochastic in the weekly chart are really quite poor. And yes, leg C in the weekly chart. I don't think that the monthly charts are going to make new highs this month. That's my thinking. We'll have to deal with the reality. Now you see this little hook at the bottom here with the MACD. We'll see if that works. And you see that the price of the New York Stock Exchange came down. It did make D. I didn't even notice that. That has made its D. So you've got the Dow and the New York Stock Exchange. I don't see why the others shouldn't follow, why the S&P shouldn't follow. So we're going to be looking at this very closely tonight. I'm going to be talking about stocks that I think are acting well, under the radar stocks that might be doing okay. And I'm going to be talking about what I think will see some weakness over the coming weeks. And we'll be putting it into the context of Chapman wave methodology, etc. Have a wonderful day. I'll see you back a little later with Tom. And otherwise, I'll see you tonight, or I will see you tomorrow for Technical Friday. Basil Chapman signing off. Dow's up 141, S&P's up 30. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.